Hey, what's up, my friend? Welcome back to this week's market analysis. It's the first one of 2018. And I was just looking through my older videos in YouTube and I realized I have been, publishing videos since 2012. So it's 2012, 13, 14, 15, 16, 17, and this is my seventh year. 7th year publishing videos, and time really flies, right? And from the looks of it, I've seen that I'm slowly aging through the videos. I mean, that's part and parcel of life, and I just want to say thank you, right? If you're watching this right now, thank you. I appreciate it, and I really want to say that I couldn't have done it without you, because there is no way I will be publishing videos like this if nobody's watching. And the reason why I do this is because I have people like you who spend time each week to watch these weekly videos, and this kind of incentivizes me to continue publishing such weekly videos. So thank you. I appreciate it from the bottom of my heart. Okay, so with that said, right, back to this week's market analysis. We're gonna kick things off, right, with looking across the different financial sectors, right? Currency, bonds, indices, oil, gold, and stuff like that. So we're gonna cover quite a bit, right? So you have a good start to know what the beep is going on in the world right now. So all this and more in today's video. I'll see you there. Okay, so the first market that we'll be discussing about is euro dollar. Okay, so you just scroll back a little and see where you are in the big picture. You can see that euro dollar has been in the range for 2015, 2016, and even a good portion of 2017, and it broke out in 2017 sometime in the August-July period. Okay, so this is the range that I mentioned, and then it broke out. So right now, price is actually hovering above this previous high, and my bias is obviously towards the long side. Okay, I know price is at resistance, right? So a lot of traders will think, oh, price is at resistance, let's go short. You may want to hold your horses first, because number one, the trend is towards the upside, right? I just shared with you, right? The long-term trend is towards the upside. Number two, right? If you want to go short, you want to be aware that there is some structure coming into you shortly, right? At this here previous resistance that could act as support. So this is two things to be aware of, right? So let's call this structure, and this is the long-term trend. So these are two things that you want to be aware of if you are short. So this is why I would rather not be short. I would rather stay long. So what am I looking for in a long setup, right? So quite a I won't use the word quite, right? But what I'm looking for is actually a build up at this highs over here. So what is a build up? A build up is basically a consolidation, a tight consolidation where the candles just can't seem to go anywhere, and it just around this area over here. Okay, so why the logic behind this pattern I'm looking for is because when the market is at resistance and traders look at it, hey, the market is still at resistance, let me quickly go short before the market collapse. So they go short, and where would they put their stop loss? Well, chances are they put it above this high or above this high. Okay, and if the market doesn't break down and it breaks up instead, what's going to happen to all this cluster of stop loss? Well, it gets triggered, right? And it becomes a buy stop order. And these buy stop orders will fuel buying pressure, which will lead to further price increase, right? And on top of it, right, momentum traders or traders who look to trade breakout, they'll go long on the break of the highs as well. So enough order flow to push price higher. So that is why I like to trade build up at this type of obvious highs and lows, which I'm basically trading against traders who are kind of fading against the highs and lows, meaning they are taking a counter position to me. All right, so this is for euro dollar. Pound dollar, let's discuss this, right? So again, this is a trend is towards the upside. If you're not sure what the trend is, right, a very quick tip that I always share is just to pull out your 200 period moving average. If the price is above it, stay long. If the price is below it, stay short. It's not foolproof, but it will keep you on the right side of the trend more often than not. Okay, so this is pound dollar. Since price is above the 200 MA, stay long. So a possible setup is for the market to retest back this 133 level, right? And maybe form a hammer, an engulfing pattern, right, to give you an entry trigger to go long at this level over here. So that's one possibility that I'm looking at for pound dollar. So another market I want to talk about is dollar Canadian, right? let's talk about Aussie dollar and New Zealand dollar, right? To be fair, that we are covering all the major currency pairs. So Aussie dollar, there's not much on the daily time frame. You can see that, strong bullish momentum, right? And now it's going to retest this previous swing high. Other than that, right, I'm not really seeing anything, right? Similar for New Zealand dollar, strong bullish momentum, right? And then towards this swing high over here. So one question you may be thinking, right? So Rayner, will you be looking to short, right? Since price is at this swing high, and the answer is no. I don't like to trade minor levels, right? What are minor levels? Minor levels are basically, swing highs and lows, right? Nothing that is too obvious. Like, this is a minor level. I would say this is a minor one. The major levels are those that, kind of stick out in your face that you can't miss, like this. This is a major level, right? It's in your face. All right, zoom out a little, you notice that this again is a major level. It sticks out in your face. Okay, so I like to trade levels which stick out in your face, right? Because these are the ones that attract the most order flow and could lead to the swiftest reversal, right? To say, right? So this is why I like to trade major levels. Usually minor levels, I tend to, not fade against them, or rather not to trade against them. I mean, I don't trade minor levels, right? In fact, I usually trade against this level. So meaning price has, been bullish over the last couple of weeks, right? I'm still long, right? In anticipation that, this minor level would break. Okay, so this is my take on it, right? I don't trade minor levels, but only the major ones. So a quick tip for you, right? How do you know whether a level is major or not? You just go up to the higher time frame, right? If it can be seen on the higher time frame, it is a major level. No doubt about it. Dollar Canadian, this market, okay, so again, this market, dollar strength, right? You can see that it's been a range over here. Price broke down and is retesting this swing low over here. If you ask me, there's a good chance it could, pull back a little and continue its downward movement towards this swing, or rather this multi-year low over here. So now a question is, right, how do you, get short this trade? Couple of ways you can do it, right? Let's talk about the daily time frame first. If you want to trade a daily time frame, what you could look for is inside bar like this, right? Notice that this over here is an inside bar. So an inside bar is where a candle is contained within the previous candle. So you can see that this body over here, this body of this candle, the range is contained within the prior candle. So this over here is a form of a volatility contraction where volatility has shrank, right? Because the range has been reduced compared to the prior day. So one way to trade this is actually to place a sell stop order below this low and have your stop loss above this high, right? Give it some buffer, maybe say somewhere over here, right? And if the market breaks down lower, there's a good chance it can continue. So this is how you can trade an inside bar. So if there's another inside bar, let's say form somewhere like this, right? You could look to trade it as well. Alternatively, right, you can go down to a lower time frame like the 4-hour time frame, right? And I like to use the 20-50 period moving average, but in this case, the 20, is the one that's being respected by the market, right? Tested once, twice, right? So if the market were to retrace higher, the 20 MA would continue pointing down lower. There will be a potential setup over here to go short. Maybe you can trade the price rejection of it, right, on this 4-hour time frame. So a couple of ways you can trade this dollar Canadian market. Another market I want to talk about is the dollar Sing, right? This is a trade that I took. So again, it's very similar to the dollar Canadian, right? I was actually contemplating between dollar Canadian and dollar Sing, right? But obviously dollar Canadian would have been a better trade on hindsight, but I don't trade on hindsight, I trade in real time. So let me explain to you my thought process. So again, dollar Sing, right? Massive strong bearish momentum towards the downside. Right, then I went to the 4-hour time frame. I saw this price action that I like. Notice that again, right? Price is respecting the 20 period moving average, this red line over here. And I saw this one over here. This someone like this, right? Like a bearish flag. Notice the pullback is relatively weak, right? You look at the strong sell down, right? 3 strong bodied candles, but on the pullback, right? The candles are all very small. This tells you that the buyers are unable to push price higher, and the sellers are clearly still in control. So I went short on the break of this lows, right? Okay, and my stop loss, right, is just basically a buffer above this high. I think so, somewhere here. Okay, I used the ATR, right? Basically 1 ATR above this high. So that was where I placed my stop loss, right? And price did went in my favor, but it's pretty much not as beautiful or as great as the dollar Canadian trade. Because if you notice dollar Canadian, there was another similar setup on dollar Canadian, which was at this portion over here. Again, and price broke down, and in this case, clearly it went much stronger towards the downside. I believe there was a news on Friday. So again, right, I was contemplating between dollar Canadian and dollar Sing. I went with dollar Sing, and again, right, I can't predict what or which will be the best trade, right? So this was a trade that I took, dollar Sing. And dollar yen, just a super quick one, right? Because I'm not seeing anything on dollar yen, right? Price is pretty much in a range, right? So my guess is that it will continue to be in a range until price breaks out of it. Then I'll take a bias, whether I want to be long or short. Okay, so that's for the currency side of things. Let's move on to the bond markets. So the bond markets, right, look at the 10-year. You can see that price has been, steadily declining lower. And the thing about bonds is that the shorter term duration bonds, meaning the shorter, like this is a 10-year, right? If you look at the 5-year, it's a shorter duration bonds, right? The trend is more pronounced towards the downside. So if you look at the 5-year, right, this trend is, quite beautiful, right? It's respecting the 20 period moving average, right? Tested once, twice, thrice, 4, right? So you can see that, there is opportunity to trade the bonds towards the short side. So couple of ways you can do it, right? If price break below this low, you can look to get short. Alternatively, if you retrace back towards the 20 period moving average, right, you could look to get short as well. So the 5-year bond is another market that is, worth trading. And this again, right, is because, right, that interest rates are starting to rise. So when interest rate rise, right, bond prices tend to fall. So this is why you notice that, the 5-year, the 10-year, the trend is, towards the downside. Okay, because of the rise of interest rates. So that's for bonds, right? Moving on, indices, right? Very straightforward. S&P 500, one word, bullish. Don't try to short this. Don't try to predict how high it will go. Just follow the trend. Okay, it is bullish. There is no reason to be shorting this at all. I repeat, there is no reason to be shorting the S&P at all, right? Because if you think about this, right, if you want to go short the market right now, you can zoom out all you want. There is no structure for you to lean against to place your stop loss. You feel me? Right? I repeat once again. If you want to go short S&P right now, there is no relevance structure that you can use, that you can lean against to place your stop loss. So this is why I say don't short this market. Okay? Stay long. Or if you don't want to stay long because price is too high, it can't go any higher, then stay on the sidelines. Don't short this market. Now, for those of you who want to stay long, how can you look to get long? Let me share with you, right? So again, this should be pretty obvious, right? Notice that this market is clearly respecting the 20 period moving average. So possibly if you test back towards this 20 period moving average, you can look for a reversal candlestick pattern, right, to get long. Alternatively, right, if it doesn't get there, it, kind of like, just hold back a little, your 20 period moving average starts to catch up, you can look to trade the break of this highs as well. So these are two setups that you can look to trade on the S&P. Moving on, let's look at, okay, I mean, generally, the equity index are all bullish, right? If you look at Nasdaq, it's bullish as well. European indices, they are bullish, but not as bullish, right? But generally, worldwide indices are, in an uptrend. So no point covering every single one of them. Let's look at oil. Bullish as well. Look at this. Boy, bullish, right? So you can see that price making higher highs, higher lows. So similarly, you can look to trade a pullback towards this 20 period moving average. And you have a confluence of this, previous resistance turn support as well, right? That's for oil. And is that all? Oh, yeah, gold, right? So last one is gold. Okay, gold, gold, you can see that price very strong bullish momentum. And if you notice, right, it's somewhat similar to the Aussie dollar and New Zealand dollar because they are, commodity currency. So there are some correlation to it. So gold, again, you can see strong momentum, bullish. And I won't be surprised if price could, retest back this highs over here. So if you want to trade this gold, right, I would say the 4-hour time frame, if you pull out your 20 MA, again, you can see, possible setups that you can trade towards the long side. Okay, so with that said, right, that's what I've covered in this week's market analysis. So for those of you who want to, like for example, I have a lot of questions, traders asking, right, hey, Rayner, should I be, long or short? Right, what is your take on the market right now? Right, I highly recommend you come to this forum that I've created for you. It's called the Trading with Rayner forum, right? I know, can't really think of a good name, so why not? So over here, you click market analysis, and you can see that I have a thread dedicated to, my own trading approach. I explain everything. And in fact, right, it's a follow-up to my weekly market analysis, right? So for example, I posted a video and say Tuesday or Wednesday, I see something interesting. I'll post it in this forum over here. Because you don't expect me to email and let you know, hey, I thought this is a good trade, right? I mean, this will pretty much annoy the heck of most of you, right? So this is why I created a thread here to continue, posting my weekly market analysis. Okay, like for example, setup happens on Tuesday or Wednesday. I'll just share it over here. And along the way, I like to, share tidbits, golden tidbits and nuggets. Like, for example, what did I share recently? like something like this, right? The 200 MA as a filter. It's a question that someone asked. The recent one I mentioned is oh yeah, one thing I like to do is also to make you think about your own trading. I don't like to spoon feed you and say, you should place your stop loss here, place a profit target here, blah blah blah. Instead, I like you to think deeper, like, where will you place your stop loss? How will you enter? How will you exit? How will you manage your trades if it goes against you? I find that this helps you become a better trader by thinking deeply about your own trading instead of spoon feeding you with answers, because that won't help your trading. So yep, this is a forum. It's completely free. Come check it out. All right, and sign up for it and take part in our discussion, right? We have over like 1,500 members, over 100 over discussions, over more than 1,000 messages so far. So yep, it's completely free. The link is forum.tradingwithrayner, over here. So yep, with that, right, I have come to the end of this week's video. And if you've enjoyed it, right, please hit the like button, the subscribe button, because I will really appreciate it. So with that said, I wish you a fantastic start to 2018, and I'll talk to you soon.